Hello and welcome. Today in my first video on this channel, I'm going to help you understand some of the basics of investing in the stock market. If you are quite new to investing or interested in getting started, or just simply want to learn more about it, this is a great video for you. In this video, I'm going to be going over a variety of topics such as stocks, shares, stock exchanges, index funds, and brokerages. I will be also giving out a few simple tips to get started with investing. In my opinion, these concepts are important for investors who are just starting out. The goal of the videos on my channel is to help students in high school learn more about investing and how they can get started. I hope you enjoy this video, so let's get started. Let's start with our first concept, which is stocks. I am sure that many people know what a stock is, but for others who are unfamiliar with this concept, in simple terms, a stock are shares in the ownership of a business or company. It is described as a type of equity that represents the ownership of a fraction of the issuing company, while a share is a percentage of ownership in a company. Stocks and shares can sometimes be hard to understand, but it's important to recognize that a share represents the part ownership of a specific company, while stocks represent part ownership in multiple companies. It's hard to describe, but it's almost like a stock is a pie, and a share is a piece of this pie. Up next, we will focus on an example to help make this concept more clear. So to help further explain what a stock is, we can create our own example. For example, let's take the company Loblaws, which is traded on the stock market. Let's say that Loblaws has 100,000 shares. These shares are a piece of the Loblaws stock and company. People have the ability to buy and sell these shares. They will sell or buy the shares depending on a variety of factors such as how well the company is doing, how the stock market is doing, and any triggering event or crisis that may affect the stock or company. Let's say out of the 100,000 shares that Loblaws has, I decide to buy 1,000 of these shares. Each share is priced at, let's say, $100. And if I buy 1,000 shares, it will cost me $100,000. After buying these shares, I will now own 1% of the Loblaws stock. So that is what stocks and shares are in relation to each other. To further understand the stock market and the basics of investing, we are going to look at the stock exchanges, what they are and what their purpose is. In simple terms, a stock exchange is a type of market, but for stocks. These exchanges are where the buyer and seller can connect and exchange stocks through buying and selling them. Some examples of stock exchanges in North America are the NYSE, which stands for the New York Stock Exchange, as well as the TSX, which stands for the Toronto Stock Exchange. A variety of different stocks are traded on these exchanges. One of the most famous exchanges that people tend to recognize is the New York Stock Exchange. This is just because that is where I see most people trade on. There are also a variety of other exchanges outside North America, in London, Australia, and India, etc. These stock exchanges are all over the world. Now moving on to index funds, which in my opinion are a very important part to investing for beginners. I hope to cover this topic in more depth because, in my opinion, investing in strong indexes is a smart option, especially for beginners. These can be a little bit difficult to understand in the beginning, but after you start to understand the basics, it will all make a lot more sense. So, an index fund is a type of mutual fund that is typically a large portfolio made up of a variety of different stocks. This portfolio is built to match the components of a financial market index. In the photo graph above, you can see the performance of the Vanguard and S&P indexes, which are both collections of the top 500 largest companies in certain stock exchanges. The price of the index is in relation to the price of the stocks listed a part of that index. Some of the stocks that are part of the S&P 500 include Apple, Microsoft, Berkshire Hathaway, and Nike. These are just 4 out of the 500 stocks that you invest in when you put your money in the S&P. The price of these index funds are usually quite high just because the collection of the stocks is quite large and also valuable to many investors. For many beginner investors, index funds are the way to go in my opinion. They're relatively risk-free, and if you put enough money into them, they can do well in the long term. The only thing is that the return on these index funds often takes a lot of time, so they're more of a long-term investment. If you want to learn more about index funds or are interested in investing in them, I suggest you check out the Investopedia article on them just to get some more information on them. I'll leave a link in the description to the Investopedia article talking more about index funds. Last but not least, a less important topic, but still one worth learning about: brokerages. This is not an entirely important subject, but I will briefly break it down to help you understand it. Brokerages may be helpful further down the line as you get more familiar with investing. Although brokerages are not a huge part of the basics, I think they are important to help beginners understand that they have resources available to help them along the way. Investing is not something that you have to do on your own. You can have financial and investment advisors that can help you make the right decisions. Yet, for most high school students, you will be investing with your parents or guardians, and brokerages will not be needed. As I said before, brokerages are usually brought in when you get more serious about investing. A brokerage firm such as Fidelity Investments or Questrade are some of the examples of brokerages. A broker and a brokerage firm are two different things, yet similar. A broker is usually a person who gives advice and information to clients who are looking to invest a sum of money. A brokerage, such as Questrade, is a storefront for purchasing stocks, bonds, ETFs, etc. The main thing to understand about brokerages is that you will need them to actually invest in companies and make that transaction. I'm not saying that right after this video you should go open a brokerage account. After you've done more research and learned more about how to create a good portfolio is when you should start setting up a brokerage account with a well-known and reliable brokerage. Now that we have covered some key concepts to investing in the stock market, let's take a look at some tips to help you get started. My first tip is to do your research before you start investing. Hopefully this video gave you a sense of some of the key concepts that come with investing, but it is still not enough research to get started. I highly suggest that you check out some other channels, videos, or websites to further educate yourself on these topics. Without research, you will struggle and will not be able to be successful in the market. The next tip is to try a market simulator with your friends. If you have a group of friends who are interested in investing, you can start a market simulator group and create a fun little competition. There are a variety of market simulators that let you invest a certain amount of fake money into a simulation of the stock market. These simulators are very accurate and let you track your earnings and losses. I have done many simulators before and they really helped me understand what strategies work for me and what don't. The next tip is to read books. There's a huge amount of books that can help you become an expert in investing. They can be really helpful, and I highly suggest that you look into some that are of interest. Another key factor is to be patient. Many people will go into investing with no research or knowledge and start their portfolio. By rushing, you are just setting yourself up for failure. Last but not least, I recommend that you set investing goals. Are you trying to make money to buy something in the next couple years? Are you wanting to set up a long-term account? These are just a few things that you should take into account before you start. Although I didn't cover all the things I wanted to in this video, I really just wanted to focus on what I think is important in terms of starting off. I will cover a variety of different topics in future videos, and I hope to cover topics that you are interested in learning more about. If you have any advice or video ideas, please make a comment or send me a message. Any website that I think may be valuable for further inquiry, I have included below in the description. To give you some insight into what is coming next, I hope to cover a variety of different topics, such as creating a balanced portfolio, analysis of different stocks, and bullish versus bearish markets. I am going to be talking about cryptocurrency with a guest speaker. We will talk about what crypto is, some of the uses for it, and as well some of the dangers of crypto. My next video will not be out for a while, but I will work hard to post it in the coming weeks. Thank you.